Morning to everyone, and welcome and a good morning to Behind the Markets. Good morning, Stephanie, and how are you doing on this lovely Friday morning?
Good morning, Munyumba. How are you?
I'm good. I'm good. This is how we try and clear up the whole tie scenario. Buchizia, my old co-host, used to tell me, you can't be wearing ties on a Friday. That's very scary. So
I know,
yours
right? Fridays, yeah.
it's meant to be relaxation day. So I'll be with you, Amayuthi, for today by just taking off my tie.
Just
But
sweater, just.
how's your morning going, Stephanie?
My morning is fine. How's your morning going so far?
Good, good. My morning had a very good reading. I did what's it called? The book, the not the book, sorry, the sermon series, Winning the War of the Mind. And today's lesson, Stephanie, was reframing, learning to interpret situations but obviously by our spirituality, but by God's goodness and not interpreting God's goodness by the situation. So it's always a good morning. It's always a good morning as long as he's there. Well, let's get started today. Obviously, today is Friday, it's Futuristic Friday. We're going to have a couple of conversations, get through the talking points today. And the big conversation today, people, is Pan Africanism. Okay, Pan Africanism through trade. That's Futuristic Friday's conversation point today. Is do you think the Africa Free Trade Agreement is the silver bullet of wealth for Africa? Okay, do you think the Africa Continental Free Trade Agreement is what is going to pull Africa out of poverty and pain? That is the question for today, and that's going to be the main conversation. But let's get into the data points for today on our Futuristic Friday spin. So let's start with our FX markets. As we've seen yesterday, the dollar did come down a little bit again, 0.17%. But in the middle of the day, we started to see the dollar trading around 19 again. So it was just tax payments that were happening that were pushing the kwacha stronger, but that has temporarily ended. Dollar is only up 4.72% year to date, but up down 1.82% on the week and down 0.17%. The rand pushed back up above a kwacha, back up 1.53%. That was strong rand data that came in while we were also seeing year to date. Year to date, the rand is down 5.2%. Now, going into GRZ bonds, we did see that the GRZ bond index is still up another 0.11%, up 16.42% year to date, meaning that our GRZ bond index has continued, as you can see, on a steady growth path. Look at that. That is a beautiful straight line there that is showing you that it is managing a steady growth above inflation. This is what I always mean when I say bonds grow your money above inflation in a steady pattern, especially here. So you can also see that the USD GRZ bond index, unfortunately, has been a bit more volatile due to the FX rate, but the stronger kwacha has actually tallied on to the stronger bonds itself. And the offshore bond investors, the Zambians who are living abroad, especially, did gain about 0.27% in dollars on their money, while interest rates came down by 0.016%. Showing that we still have a little bit of buying, though we've had huge sell spikes in the market. Commodities, yesterday we did see that copper dropped again by 0.73% as we keep metastasizing this, as we keep digesting this negative data in terms of growth coming out of China. We did also see that oil dropped by about 1.06% down to 86, but it's still quite elevated. Copper is a little bit soft, oil is still elevated, while gold is also dropped by 0.11% in dollars at 1,946.85. But however, in kwacha, wealth insurance assets, we are seeing that about 0.2% drop in Bitcoin, mainly due to the strength of the kwacha, 0.2% in Ethereum, mainly drop as well, mainly due to the strength of the kwacha, and 0.27% drop in gold, mainly due to the strength of the kwacha. So the strengthening of the kwacha basically reflected in the weakness of your wealth insurance assets, but still, these things are growing quite strong. So if you look again, remember I said this is as of yesterday, where are our assets looking at year to date? Bonds up 16.4%, stocks up 14.1%, dollars up 4.7%, while gold is up 11.6%, Bitcoin up 85, 85.4, but remember that's due to quarter one, and 61.42. But if you look at where we are in the quarter, bonds are up 2.72% in the quarter, stocks are up 1.63% in the quarter, dollars up 7.75%, gold up 8.75%, while Bitcoin is only up 3.54%, and Ethereum up 3.7, meaning in dollars they've actually lost value, but in kwacha they've gained because of the strengthening of the dollar. So we've just seen a dollar rebound this quarter after the horrid dollar sell-off, where we saw the dollar sell off 17.5% last quarter. So this is just something for us to pay attention to. Now, in terms of our four horsemen, we did see a bit of mixed data, but negative to the skew. We did see Egyptian inflation rise again; those are headwinds. But most other inflationary data is showing that things are getting better. Italian inflation dropped from 6.4 to 5.9%. Rwandan inflation dropped from 13.7 to 11.9%. Namibian inflation is back down below 5% from 5.3 to 4. So the highs of Namibian inflation at 7% to finally come down. South African manufacturing rose by 5.5% due to a very good month. So in other words, we're seeing South African manufacturing bouncing back, meaning South African goods may start becoming cheaper in rands. US core inflation came down from 4.8 to 4.7, meaning US supply chains are starting to recover. However, headline inflation rose from 3 to 3.2, mainly due to bumps up in energy costs. Energy costs are starting to rise again due to Saudi Arabia, and also mainly due to Saudi Arabia and some speculation of the second half of the year. Interest rates, on the other hand, India kept its interest rates flat, while the US core inflation has come down, meaning that the Federal Reserve is not as stimulated to raise inflation interest rates again. As you can see, 4-week and 8-week bills are coming down, but 30-year bonds are going up, and Mexico held its interest rates. So we're starting to see the yield curves and interest rates start to normalize again. In terms of growth, however, growth was slow. Brazilian service sector grew slower. Unemployment in Turkey rose. Jobless claims in America rose. And also, continuing jobless claims are still elevated. So what you are seeing is that there is still weakness in the economic growth story of the world. So global growth is kind of weak. While industrial data, we did see Turkish production improve a little bit, but that's idiosyncratic. That hasn't got to do with the outcomes of the rest of the world. So looking at all of this, inflation is still coming down, interest rates are still coming down, but growth is weak, and industrial demand is actually starting to slow down. So these four horsemen help us look at what we're seeing in terms of data for the week and story. Now, in terms of my expectations of oil, I'm going to give you my early expectations 11 days in. What are we seeing? Markets are currently showing that you should be expecting the oil price, the pump price, to hit 27.36, somewhere around 1 kwacha 18, where due to increases in the value of the dollar and especially rises in the price of oil coming this month, everyone should wake up to the fact that we might experience a 7% hike in petrol prices this month, if not next month. I'm just giving you a heads up based on data. However, this can turn around because this is still a preliminary read to give us an early announcement. It does not mean this is going to exactly happen. This is a preliminary read. When we get closer to about the 21st to the 23rd, that's when we get a lot more confident in our reads. But this is an early predictor as to how the first 10 days have played out. So expectations is that we're seeing upward pressure on the pump price, pushing it up by 7% expected this month, mainly due to the performance of oil. Now, finally, Stephanie, in terms of our only deep dive for today, the recent Israel-Zambia business forum has actually been announced to have brought in deals worth $800 million in agriculture, energy, technology, innovation, and financial services. Mainly, they've seen $5 million worth of investment pledges coming into technology incubators in Zambia, $50 million worth of deposit-taking institutions, and $640 million in trade credit, insurance, and project guarantees, and $100 million to be invested in a 71-megawatt solar and wind energy plant. So you can see that that is the main goal of these trade trips, to make sure that Zambia economically benefits down the line. But a lot of these things will probably bear fruit 2 to 3, if not 5 years down the line. At best 2 to 3, but really you're looking at 5 years down the line, because you always have to be patient. It's not a microwave. okay, where things just come out immediately on the other side. So that was the main big story that was talked about yesterday and continuing amongst most of the trade deals that we're seeing. And you're starting to see the sectors: agriculture, energy, technology, finance. These are areas where you're starting to see a lot of, or constantly a lot of economic activity and economic interest. And the investors abroad are kind of giving you a signal as to also what industries: agriculture, energy, technology, innovation, finance. If these are the areas they're comfortable investing in, then there's something they are seeing that we need to always pay attention to, because these are the growth areas of our economy, or the potential growth areas, though agriculture is still struggling. So, with that in mind, Stephanie, the big conversation today we'll be having is about continental free trade. Okay, and the question which we are putting out to everyone, and I put to you, is: do you believe that that African continental free trade is the secret to Africa's wealth? What are your thoughts, Stephanie?
Just before we get my thoughts, I should actually be saying we do have it coming from Oscar. And Oscar saying good morning to you and everyone that is tuned in. We are on board. And that's a question that we should actually be throwing, obviously, you might want to write it just on the board so that I could actually get to throw also to the people that are listening on the other side.
So the question is, Stephanie, do you believe that African continental free trade is the secret? Sorry, that's meant to be two, is the secret to African wealth creation? Okay, do you think that African continental free trade is the secret to African wealth creation? Do you believe that this is the thing that's going to turn the fortunes of this continent from the beggar state, the pariah state, the state that's at the mercy of the beliefs of the Western world, where we have to ask them for medicine and food and everything? Do you believe that finally learning to trade with each other will open us up to something great? What are your thoughts, Stephanie? And what are the thoughts of the people around?
Well, without a doubt, I think this is definitely a way to go. I think we've been very dependent, obviously, on the Western countries. For instance, look at the likes of Kenya, obviously. Look at the likes of Saudi Arabia. There's so much we could actually get, even just fuel from Angola. So if we could actually begin to trade in that way, I think it's actually beneficial for African countries. So I do believe actually that that's one of the ways we could actually get to make it.
I remember Vusi Tembakwayo was actually talking about this once. He said one of the biggest problems with Africa is that we have a continent that does not absorb labor. So we have this young workforce, young people pumping out, ready to work, but we have nowhere to put them because we're not producing anything. We're consuming everything and producing nothing. Okay? We're producing very little, and what we produce is
Someone
often at
said,
very
yeah.
low value. Sorry,
Someone
continue.
told me, why should we import a toothpick as well? Yeah. Why should even just a toothpick be imported? Really, if people make pigs locally, are they not really able to make a toothpick as well?
I'm even questioning whether we make pegs locally in this country, because we import, so we've gotten so used to importing. The worst part
I've seen it happen. I've seen it happen.
The worst part, Stephanie, is we export the wood. It's not like we have no wood in this country. We export the wood and then import the toothpick. That's where the problem comes for me. That we have not learned to manufacture and produce what we consume. Wealth is first and foremost created when people consume from what they produce. Within what they produce, poverty is created when
Mm.
you consume beyond your means. And Zambia is, and even as a person, when you spend beyond what you make, automatically that's the first problem. So the first problem for wealth creation is the production, is when production is below consumption. This is where the problem starts to lie for the people of this country and even this continent.
Mm.
You know, one of the scariest things, Stephanie, I've always said is, for example, if you take a look at Zambia, How many rivers and lakes and bodies of water does Zambia have? Where can you go where you won't strike water? Yet you still import fish. You import fish, things that are grown in water, we import them. We have so much water. Yet, do you know who the number one exporter of fish is in this continent? Not Zambia, not another country with water. No, Egypt. Egypt. A
Exactly.
desert with one river running through a desert is where the problem is. And this is why Dumisani Ngube said, he said, if you take, he said, the problem with us as Zambians, we are the poverty carriers of our poverty. That if you took all the Zambians out of Zambia, Zambia now starts becoming a first world nation. You bring us back, we immediately come back to poverty. Why? Because the poverty is here. It's starting here and then it's translating into our behavior.
I was almost going to say the mindset as well. Definitely. I think it's time for us to actually put up the number on the board. Obviously, you could actually get a comment on 077 077 And really, the challenge is that we do not have a lot of young people in the workforce, in the labor market. Zero at the end, after 29 years. Obviously, 077 is the number that you are catching this conversation on, as well as Facebook, Money FM Zambia 93.7. Catch the conversation. Why don't we have most of Africa's economies having a lot of people that are producing? And you know what I read, Munyumba? I came across a report. I think that was on the BBC. I was reading a certain article. And so it says one of the biggest problems with Africa is that they've got limited human capital. And I was like, hell no, we do have a lot of people. It cannot be human capital.
No. It's not the amount of human capital, it's the quality of the human capital. In other words, the ideas. The problem we're having is an issue of human capital quality. Quantity, we have enough. And in fact, by the end of this year, what's it, 2050, even the end of the century, we're going to be the biggest population. So we've got the youngest population, we have the biggest growth capacity. One of the problems comes that we are fragmented. Okay, this is why continental free trade. So today we're going to discuss the importance of how continental free trade can work and what we should be looking at doing. So let's take a look first at our chart of the day, our topic of discussion, which is research, which is what we've done, where we've looked at Pan-Africanism through free trade. This was part of our review of the Bloomberg New Economy Gateway Africa Summit Spotlight on Pan-Africanism that was done in an interview with the head of continental free trade. So what they have said is, look, it's the second year of business for African continental free trade, and there has been a new push by ministers to start to look for different emphasis on it. So there was an interview with Wamkele Gebetswemene, who is the General Africa, is the Secretary General, of the African Continental Free Trade Area since 2020. He's a BA law student from Rhodes. He's got an MA from Oriental and African Studies, and he's also got a master's in law in banking law and financial regulations from the London School of Economics and Political Science. So this is, and he's worked for the World Trade Organization. He's worked for the UN. He's worked for the South African Trade Office. He's one of the guys who's working very closely on this as well. So let's go through the interview that they had with him. But I first want to start with some points, Stephanie. Africa's potential block size, borderless block size. So if you took all the African economies, this is a $3 trillion economy, okay? And it can be a lot more if we learned to trade with one another. Because we trade more. Africa, here's one thing you need to learn. Africa trades more with countries in other continents than they do with their own neighbors. That is the first problem. And when I say more, I mean only about 20% of import and export in Africa is done with neighboring countries. 80% is done with countries outside. That's how bad it is in terms of the way we do not do business with each other. Africans do not do business with each other. This is the problem. So this is the United Nations data. what they found was 14.4% of intra-Africa, 14.4% is the percentage of intra-Africa trade of total Africa exports. Okay. Now, what what UNCTAD is now as projected is that Africa continental free trade could boost this to 33% and cut the continent's trade deficit by 51%. So, in other words, if we traded more with each other, we'd actually have healthier economies. Okay, so Africa continental free trade could boost this within the next 20 to 30 years if we really push it. One of the other factors that they've pushed out also is that it's expected that $450 billion worth of new GDP in Africa will be created by Africa's continental free trade operating by 2035. So that is a 7% increase in our current economic wealth that can happen, economic activity that can happen by just trading with each other. So this is also the Africa Continental Free Trade, and it's expected to lift 30 million Africans, even though that's not much, that's only about 3%, but it's expected that it can lift 30 million Africans out of extreme poverty because of new productivity opportunities. Now, here's an example in terms of inter-regional trade, imports plus exports as a percentage of total trade. You find it's countries like Eswatini, Lesotho, Zimbabwe, Namibia, who trade mostly with Africa. But if you look at the big economies, South Africa, Nigeria, Egypt. Now remember, South Africa, Nigeria, Egypt combined already make up more than 50% of Africa's GDP. Now take a look at that. Already, South Africa only trades 20% with Africa, and that's mainly export. Nigeria only trades 7%, and Egypt only trades 6%. So already you can see where the problems are lying here, that the biggest guns in Africa are not connecting with the rest of the continent. But the rest of the continent, Zambia at least were there, we trade 41% with Africa. This is according to the Brookings Institute and UNCTAD statistics by 2021. Zambia trades 41% of its total trade with Africa, mainly due to 35% of its imports coming from South Africa and some of its exports going to DRC. But mainly due to the fact that we import from South Africa. Now, in terms of if you're looking at intra-trade happening from SADC, let me just give you what I call my table here. This is Pan-Africanism through trade. If you look in SADC, SADC trades $43 billion. This is as of 2021. SADC trades $43 billion with its neighbors in terms of export, out of the $245 billion. And this is 18%. It's one of the highest. And this is mainly because South Africa exports a lot to SADC members. Most of this is just South Africa exporting to SADC members. Okay. Now, East Africa exports $7.2 billion out of its $49 billion, which is only 14.4%. ECOWAS, which is the West African nations, exports $12 billion out of its $113 billion, only 11%. And Central Africans only trade 2% of their exports to their neighbors. Imports, SADC imports 18.7% from its neighbors. East Africa imports 9% from its neighbors. ECOWAS imports 10% from its neighbors. And Central Africa imports 2% from fellow African countries. Already you can see that in total, Africans only 15% of African exports go to fellow African countries, and only 13% of African imports come from fellow African countries, already telling you that we are having a horrible deficit with the way that we're trading. We're trading more with people across the sea than we are trading with people next door to us. And that is causing logistical problems and everything. So let's go through, and as you can see here, some of the charts that support some of this. As you can see, that, like I said, with SADC, a lot of our countries do try and import from each other, but the big gun, South Africa, there does almost no trade with Africa. All they do is they export, but then the rest, nothing. They don't import from us. They'll rather import from our levels up there. The same thing you can see with East Africa. East Africa, they're trying a bit more, but you can see that the big guns of Kenya is not importing as much from its fellow East African countries, and neither is Tanzania. And remember that Kenya and Tanzania are the biggest composition of East Africa's economy. If you look even at West Africa with your ECOWAS countries, take a look at Nigeria. Nigeria imports less than 5% from its fellow African countries. These are the issues that we truly have to deal with. Okay, Nigeria, Ghana, these are the problems. So what you're seeing is that the poor countries import from fellow Africans. The rich countries, they're stylish. They import from their friends abroad. So let's talk
Mm.
about some of the factors that will drive us in this conversation as we close out today. So the main talking points we saw, here are some of the main factors that Mr. Mene was actually going through. And the first thing he says is that there are factors that are causing Africa's trade deficit. One is lack of industrial capacity.
Mm.
We're not investing in producing things. We also have lack of economies of scale. We're not producing at great scale because what Africa has done, because we operate as 47 countries, or sorry, we operate as over 50 countries, we have a tendency out to keep our markets very, very small. So 43 currencies, 50 countries, all this is what we call market fragmentation. We have central banks doing different things across the whole continent. So there is no macroeconomic harmonization of Africa to allow for people to flow trade with each other. So this is why we decide, let's just trade with the rest of the world in dollars and forget about each other. But that is actually keeping us poor. Okay? That keeps the continent poor because all we become is an extraction point. You see, when we sell to each other, we actually sell finished products to each other. When we sell to the world, we sell raw materials to the world. This is where the problem is coming. So if we learn to trade more with each other, we can actually create a lot better. So he said the progress that's been made so far is 47 African countries have signed on to the Africa Continental Free Trade. Trading actually started in 2022. Operations started in 2021. The instruments that they've put protocols for investment, they put protocols for competition, intellectual property, and they've started digital trade, where they've said market rights access, in other words, online and e-commerce frameworks, payment systems, how we can start working and creating ecosystems of payments, and also data movement, because Exim Bank Africa has also started supporting payment systems. So this is the progress that we've made so far in continental free trade. Now, the lessons they said they've learned so far is interconnectivity of countries. We are not on the same wavelength, and we need to start harmonizing. So you've heard the president, I think, mention that they're trying to harmonize customs and import laws with Angola, with Namibia, with our neighbors, so that we have a good flow. We want to make sure that something leaving Mozambique can get to Zambia without laws having to be fought about at the border, that it can easily flow in. These are the things that Africa Continental Free Trade has actually been working on. We also have to create trade supporting infrastructure. If we're going to be taking industrial materials from one part of the continent to another, we need our railway lines. This continent needs to invest in rail because you cannot move copper by truck easily. People moving this stuff by truck is difficult. Rail is where you need to move this stuff by. And our railway lines are a problem. Digitizations of customs systems. We've been talking about this. Our president has talked about this. Our trade team has talked about this. But we try to digitize custom systems for harmony and also interoperability of our custom systems so that when we're bringing products from each of our countries, our systems that we're using are speaking to each other. Okay, so we need to digitize and integrate custom systems, and this is the importance so that we can easily trade with one another without a problem. This is what borderless trade needs. Now, I said there's also the Pan-African payment system that's being talked about. There's a need to reduce dollar dominance. The political economy there's a political economic dimension to this, where a lot of people now want to say, now whose currency will be number one? So in terms of currency convertibility costs on SMEs, Africans pay about $5 billion worth of currency convertibility. In terms of the trade that we're doing with each other, there's about $5 billion worth of currency conversion that we need to start working on. SWIFT transactions in Africa are about $19 billion. So Afri-Exim Bank has created a payments and settlement system, and also digital tools will be able to later hopefully help facilitate a common currency, because that is the key. How do we get to a common currency and remove dollar trading with each other? Why should a Zambian and Namibian be trading in dollars? Why should a Zambian and Zimbabwean be trading in another currency made by someone else, which has a different monetary policy somewhere else? Why should the trade between our countries be hampered by that? And this is where the issue comes. Because once you remove dollar dominance, that's when even those countries that say, there are problems here. These people are trying to take our currency away. The other issue also is the way we designed our physical borders. We have to look at some of those. How do we facilitate trade through our physical borders? Africa also needs trade infrastructure, and we need to invest about $100 billion annually. That's how much short we are of proper trade infrastructure, borders, railway lines, all the things that we need for proper trade infrastructure. So there is a fear that the Africa Continental Free Trade will be a good legal construct, but will be inactive. Okay, this is the problem. So this is why trade infrastructure and borders need to be worked on intensely by African countries going through this point. And they have to prioritize taking their tax money to developing trade lines within each other. This is why things like the Bito Corridor being done. This is why Kolwezi to Solwezi roads. This is important stuff because this helps us start to trade with each other, where you can get oil from Angola as opposed to getting it from the Middle East. This is what starts to improve the outlook of our country. So there is also geopolitical tension that's forming in the world. Remember, there's issues between China and America. So there's also those battles happening. New trade blocks are coming. So Africa needs to reduce over-reliance on global supply chain and start to work on creating continental supply chains, where raw materials taken from one African country, produced in another African country, and the finished goods are sold in Africa. That's how we retain the wealth in this continent. But where we take something to China and then buy back the finished goods, this is where the problems are coming from. So this is what we need to work on. So I'm going to leave you with the final thought, Stephanie. I know that we've really run this one for everyone to think about, is that Thomas Sankara said these words: let's make the African market the market for Africans. Produce in Africa, transform in Africa, and consume in Africa. Let's produce what we need. Let's consume what we produce instead of importing. This is the great Thomas Sankara who left these words for us. And this is what the mark of continental trade should be. If we trade with our neighbors, Stephanie, there is a lot more wealth for this continent. We have bad trade deals, bad tax arrangements, bad everything in this continent because we do not know how to trade with our neighbors. The problem is and I would say this probably, Stefan, Africans like getting rich alone. If we learn to trade with each other, what we're afraid of is, me, if I do business with you, you will also get rich. There's that mentality.
Mindset, yeah.
If I do business, but there was an interview Patrick Bet-David did with a Jewish guy, and he said this Jewish guy was a car dealer and he made a lot of money. He said, how do you do this? He said, let me tell you a secret about the Jewish community. When you see one of us making money, just know 5 of us are making money because we've learned to make money together. So Africans must abandon the trying to be rich alone mentality and take on the build wealth together. Let's enrich each other. And not just by give us him way, by doing business with each other. Let's trade with each other and let's do business with each other. That's how African wealth gets built. And I leave that there, Steph.
And a good example, just to add on to what you're saying, I think a few months ago, we did have Kenya declare its interest, obviously, in coming to do some agriculture activities right here, obviously, in the country. Did you see people's sentiments? Obviously, we had a lot of people that were upset. Why are they coming to do land? Why are they bringing their maize here? And maybe we should actually be moving, shifting our mindset, transformation. We are brothers and sisters, and we want the same thing.
It's everybody loves this, the Viva Africa story, until it inconveniences them. Let me just leave you with one other thing, Stephanie. If you want Africans to buy African products and we want to buy locally within here, let me tell you who the secret lies in: the women of Africa. Because no matter what, 66 to 80% of household consumption decisions are decided by the mothers, the wives, the women. They're the ones who decide what products enter homes. So if we make them, if they spearhead and say, we are going to empower our continent, if the women of this continent decide African products are going into their homes and only African products are going into their homes, Africa becomes rich. Unfortunately, our ladies, we like Paris and Italy and New York.
Exactly.
So that's another spiritual fight we need to deal with another day.
But for today, it's actually been a beautiful day, been a Friday, of course. Until is it next week again? It's bye for
See you
me
next week.
and
Bye for
Munyumba
now.
on the other side.